But in India, it seems to be that the government is more stepping in and taking the initiative and kind of slowing down that crypto growth and crypto market. If you remember, China banned Bitcoin earlier this year for about, I don't know, the 45th millionth fucking time. They always say that, and it seems that they always say that to sink the price of Bitcoin, and then it magically seems to go up shortly thereafter. But it looks like, India came out, remember, and they said they're banning Bitcoin, and now what did you tell me offline? They're proposing some type of 30% tax or something like that.
Yeah, they're gonna tax all Bitcoin holdings 30% of your unrealized gains if you currently have Bitcoin, and then when you buy Bitcoin now, you have to pay a 30% fee up front. So if you spend $100,000 on Bitcoin, you have to spend another 30,000, and it goes right to the government in tax.
Well, that sounds like fucking blatant theft. That kind of reminds me of Biden's proposal to tax people on unrealized gains. Remember that shit? And then it got scrapped.
Yeah, but this has like a very high chance of going through, I think. And they said that participation in the crypto market in India has dropped 95% since the proposal, which is probably their objective. They want to get all the people out of the crypto market in India.
Yeah, that's pretty horrific. And, on that same line of topic of people getting out of the crypto market in India, it looks like there are a lot of Americans getting out of the crypto market. I mean, Bitcoin kind of coming down. We've been saying that we like the long term prospects of Bitcoin. We're both kind of very bullish in that respect. But we did mention and we did say extensively that we do think that there are some entities and some dominoes that need to fall and some bad times that need to come before the real good times will roll in. So we spoke about some of these companies ad nauseum about, well, really more specifically with those companies ad nauseum, we've spoken about how silly they are, how stupid they are, and how over leveraged they are, and some of the varying different problems that they have, whether that be financially, regulatory, any sort of aspect like that. But we also mentioned about Sam Bankman-Fried with FTX going around and kind of bailing everyone out. He also came out recently and he said that there are more companies that are going to get hit hard and more companies that are going to go under. And he just said, it's basically just the free market taking hold here. And I completely agree with him, especially in that crypto space. When you think about the legitimate and like last free markets in America, it's probably like, I would say, which is a lot of people might not even realize it, but like that whole anything with like collectibles or like graded or graded sports cards is up there for sure, or like graded comic books or any type of collectible market like that, and then crypto. Those are the last free bastions of free market capitalism left in America, I would say, without too much regulation. So that's pretty cool to see. But the main thing here that I want to get to is that we've mentioned and we hyped up Coinbase and some of these other exchanges that have been pretty good, but Voyager was one that kind of came in and they were a little sneaky. And Voyager ran into a plethora of problems. We previously spoke about this with 3AC Capital, and it was this big hedge fund. I believe they were based in Singapore, right, God?
Correct. Yeah, 3 Hours Capital was based in Singapore, but yeah, Voyager. They went bankrupt. A huge problem in the crypto industry now is that they just keep rehypothecating the cryptocurrency that they have on their balance sheet. So, say you deposit or buy cryptocurrency on one exchange, right, and then you loan it out, then the exchange is basically going to take a loan on your cryptocurrency. So they say like we don't really know, it's not really transparent about how many times it's loaned out. Is it loaned out 10 times, 15 times, 20 times? And that's the problem with a lot of these exchanges. When they get one person or one of their lending clients goes bankrupt and they don't have assets to pay back all of their clients, and they get into huge trouble because they're over collateralized and they're over leveraged. And that brings up the topic of basically cryptocurrency regulation. And there's a couple of regulations that I think the cryptocurrency industry should take. They should regulate stable coins, and they should basically regulate it like a money market account, where they check they audit it on a daily basis and then at a monthly basis as well, and they make sure that it's back 1 to 1 by assets that are liquid and that can be sold in under 12 months. And I also think another problem with the cryptocurrency industry is when you look at collectible assets, NFTs, and such like that. I think they should put a rule in cryptocurrency like they did with stocks, like the um, IEB Section 502, or basically, the prescriptive compliance method, which is otherwise known as the 5% rule. And they should put in like once you own 5% of a cryptocurrency or 5% of an asset of the cryptocurrency asset, you should be forced to report it so that you don't get these like wolf packs that are formed and that basically artificially pump up the price of a cryptocurrency. Because you see that with a lot of these currencies where uh, 80% of the coin is owned by one person, and then they're just holding it, and then they're artificially pumping it up through fake trading volume and such like that. So like, we got to put some of these regulations in place.
Yeah, and two of the biggest things that you just said that stood out to me completely was you were talking about rehypothecating, and then you also mentioned the idea of having stable coins but regulating them like like money market instruments and things like that. A lot of people don't know what rehypothecating is, so I guess to kind of give them some broad like definition of it, it's basically so like when you go to a brokerage house, I'll use that as an example, or you open any type of brokerage account, whether you go to Wells Fargo, fucking Charles Schwab, Fidelity, Vanguard, etc., E-Trade, right? I don't know what you guys, Robinhood. And let's say you're going to use margin, you have to fill out like a hypothecation agreement, which basically means that um, in the event that you default on whatever margin you had, you get margin called. They have rights to asset seizure to then be able to pay off creditors, or in the case of them being the creditor, they have the right to, rightfully so, collect on whatever you defaulted on. So, like God said in his previous point, is that a lot of these agreements are signed and you have people taking out loans on crypto and they're kind of arbitraging the loans. But in doing so, it's like the same groups of people are exposing themselves to the same credit risk and lending risk and moreover business risk, because if you're loaning to person A and you're entity Y, and entity Y, you are getting crypto from, you know, whatever company C, like company C is at risk because you're lending out to that customer, right? Or whatever the case may be, because you're just using the proceeds from the loan they gave you to then reloan it back out. So it becomes this weird, tricky dichotomy. Now, as far as money market instruments and what you previously mentioned, God, so there's coverage for money market instruments, and it's called SIPC. Maybe you've heard of FDIC, but SIPC is basically the same thing. So it's protecting against the loss of cash and securities. So that would be any type of like equities, as well as debt instruments like bonds. So it would be at any type of SIPC member firm. And basically the limit is 500,000 and the limit for cash is 250,000. So now you mentioned with stable coins about having them regulated like money market instruments. Would you think that any type of I guess SIPCS coverage would be suffice too, or like how would you kind of regulate that?
Regulate stablecoins or regulate.
Yeah, regulating stablecoins, because you mentioned that you would regulate them as a money market security. So would you have some type of like SIPC coverage or something similar to that?
I mean, you could have private insurance. You could insure it through the Lloyd's of London or such like that. I don't think you necessarily need SIP insurance as long as it's audited and marked to market at 4 p.m. each day. I don't think you need any kind of insurance and such. You just have to have an auditor sign off on it. So like one of the big accounting firms sign off and make sure that the money's actually there each day at 4 o'clock.
Well, you don't want an attestation because that doesn't mean shit. that literally doesn't hold up in court. Like an attestation doesn't mean anything. Like
No, an
Tether,
audit, a
who's been
full audit, not an
screaming,
assertion.
yeah, okay, all right, a whole audit. Like you want them signing off, like boom, money's there, money's there, money's there.
Right. They don't sign
Yeah,
off then.
okay. Because the whole thing is that you see this a lot, especially in the crypto spaces. We saw this with Tether. They get like these attestations, and like every couple of years, they keep changing auditors. Really, like what happens is if you're a publicly traded company, you have to change your auditor. This is a provision of Sarbanes-Oxley. I talked about this in the Dolo episode a little bit, but Sarbanes-Oxley was introduced in 2002 after the collapse of Enron, and it's basically this amalgamation of laws, and one of which is publicly traded companies have to change independent third-party auditors every 5 years. But you're seeing Tether change auditors a lot more frequently than that, which means that there's usually some shenanigans going on. And more often than not, you could actually kind of spot these trends with certain publicly traded companies that consistently change auditors, right? Because I used the example in that episode of Apple, and I said if you're Apple and you're this big prestigious company and you have a ton of money, like you're going to have people line down the block to be your auditor, right? So the whole thing is that if you don't really present the results in a favorable light that they're looking for, they're just gonna can you and hire someone else, and then that's it. So in the case of Tether, it looks like they keep constantly changing their independent auditors, which is a major red flag, like I said, because they're first of all not a publicly traded company. Bitfinex is not a publicly traded company either. So for them to go out of their way to consistently change auditors on a routine basis is a lot more alarming than most people would think.